The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, again, as we look across the grain to livestock trade on the day Tuesday, kind of just drifted around. Corn didn't move much from unchanged on the session. Soybeans, wheat lost a little ground as we went through the day. Livestock trade kind of chopped around, mixed. Overall, things just relatively quiet across the trade. Let's talk about it. Joining us now for a conversation as we look at the markets, Jim McCormick with agmarket.net. And Jim, always good to catch up with you, sir. Thanks for joining us here on the program. Appreciate the time. Hope you're doing well. Hope you recovered from Nashville last week, Jim.
We are recovered from Nashville. It was great to see you down there at our conference. I know a lot of our clients were very excited to meet you. A lot of exciting topics to talk about here. I mean, in the macro picture, but yeah, dialing down to where we are right now, the weather here in Northern Illinois, I tell you what, you kind of got a little bit of spring fever. It's very mild. I think there's a little bit of snow in the air possibly this weekend, but we're above normal temperatures. I think I said on the local news, Jesse, we're on the warmest starts of February on record, and it just kind of gives you that feeling that spring is going to be early. I had a client in Indiana, central Indiana, I was talking to the other day, was talking about the robins in his backyard already. And,
oh man,
you get those robins moving north. You're like, man, we're getting close. Now, granted, it's only February, but I know people are kind of itching to, get this spring planting going.
Well, I'm thinking of spring planting. I know we're going to get some key data here this week. The USDA Outlook forum is coming up, and I want to talk about that as part of our discussion here today as well. First, though, I think headline, let's get this out of the way from Tuesday. I think the biggest news item in the overall commodity stock market sector was the CPI data, the headline CPI, Consumer Price Index. Those numbers came in a little hotter than expected. I know it put weight on the stock market on Tuesday. The dollar went higher, creating some headwind for commodities, I think. Overall, just your general thoughts on that CPI data we saw, Jim.
Well, I believe they're looking for a 0.2. They got a 0.3. It wasn't a drastic miss, but it was a miss. And the reality, Jesse, what it shows us is the Fed has more work to do, to slay this inflation dragon or to put the inflation genie back in the bottle. They're going to have to, probably they're not going to raise rates, but they're not going to cut it anytime soon. I think back in December, there was a lot of people thinking, wow, we're going to cut rates. I mean, I think the estimates are 70, 85% chance that they were going to cut rates in March. And then it fell to around 50% before this number came out. And after this number came out, I think it's less than 20% chance. So, it shows us we've got work to do. And what the reaction is so negative, the stock market had priced in these cuts. So the stock market, as we speak, is just getting hammered pretty hard, although it's had one heck of a run. I think the S&P's up 20%. I think it's been up something out of 12 out of the last 13 weeks, I believe. It is technically oversold. I saw one stat, though, interesting enough, Jesse, on the stock market specifically. It says, interesting enough, in presidential years, election years like we're in right now, the next 6 weeks has a historical bias to actually sell off in the stock market and then work its way back up later in the year. And I guess it makes sense when you think about it. Lots of times we're going through, the primaries. Maybe during the primaries, the market's a little bit worried about what's going to play out. But there is a little bit of weakness bias. I wouldn't be surprised to see a little bit of correction after the run-up. But the other negative impact on commodities with that number was the dollar. If the Fed's cutting interest rates, folks, you're essentially going to drive down the demand for U.S. dollars. But on the other hand, if they're not going to cut interest rates, the fear is the belief is the dollar is either going to come in or stay here. And the dollar surged to 3 month high today, and that just didn't help a bulk of the commodities today. We're already struggling to be price competitive on a lot of the grains. You push in a higher dollar, it just makes it that much more tough to find buyers of our products.
Yeah, I couldn't agree more. I feel like, Jim, we're kind of seeing tied in with this whole inflation story that we continue to watch, and I know we got more economic data out this week, but I feel like we're getting in this window where we're seeing a little more commodity deflation, so to speak. It just feels like these markets are there's nothing bullish to help out the grains and oilseeds specifically. And so it feels like that's part of why we're kind of churning around here with a lot of bearishness in the grains overall, right, Jim?
You're right. I mean, especially in the grains. Now, the livestock we'll dive into a little bit better. They're a little bit different story, but the grains right now, specifically, we're dealing with two separate problems. The first one is supply. We had a very big crop, a lot bigger than a lot of people thought it would be this summer based on the weather. So we had a very good supply. South America overall is going to have a pretty big supply, and then we're just not getting the demand. The higher dollar's hurting us. China is cutting economic deals with Argentina on the wheat structure recently to buy Argentina wheat. A year ago, they started buying Brazilian corn. And so it's just the market right now is got too much of a product. It's grinding lower as it's trying to find demand. And the question is, where will that demand kick in? And hopefully it's sooner than later. But, right now, as you're obviously seeing what's going on, we're not racing higher. We're not getting those big flash sales, which tells me we're still not price competitive, unfortunately.
Well, I know too, and you mentioned this to me before we went on the air. We got a couple things we're watching this week. Yeah, I brought this up earlier, the USDA Outlook Forum numbers, but also China's on holiday this week. South America is on holiday this week. I feel like that has taken a lot of volume out of the grain markets here the first half of this week, Jim. And then you mentioned this thought to me with the USDA Outlook Forum. Maybe U.S. traders are kind of taking a break here, waiting to see what those numbers say later on this week. So I just feel like there's all those things together is taking a lot of volume out of the grains here at the start of the week, Jim.
You nailed it. The volume is very, very light. We do have these numbers coming out. These are folks are asking what we're talking about. It's an Outlook meeting the USDA puts out every year. And what it is, it's their first projection, folks, of the year. It's kind of the first guesstimate, really, of acreage. They use trendline yields, their best guesstimate of what demand's going to be. And everyone's going to kind of wait and see. Like I said, this is not an official WASD estimate. It is just kind of call it a crib note sheet, kind of a beginning note. But in general, what we're looking for is less corn acres. The economics suggests to plant beans. We are going to see less corn acres. But even with less corn acres, Jesse, you take 3 or 4 million acres off this corn crop. Let's say you plant 91.5 million acres of corn, and we manage to have a trend yield near 180. You're going to be looking at a total supply over 15 billion bushels. Now, total demand this year is 14.5. So that's why the corn market's struggling, I think, at the moment, thinking, hey, if we have a 500 million bushel increase in supply over the current demand, how are we going to increase our demand by 500 million bushels? And it's going to struggle to do that, which means we're going to build our carry out. And I think that's part of the reason why the corn market's struggling. The bean market, we're going to see probably we're going to lose corn acres. We think some acres will go to cotton. Maybe some acres will go to spring wheat, but a bulk of those corn acres are probably going to go to beans. Now, if you plug that bean number in and throw in the trendline yield, it all comes down to how quick are these new renewable diesel plants coming online. If you're an optimist and you think these plants are going to get up running fast and furious, then you can keep that balance sheet somewhat intact and not look too bearish. But if there's a problem getting these plants up and running, finishing the product, getting labor to cover the plants, because we know there is a shortage of labor in rural America, that could delay the opening of those plants or getting them up to full speed. And if that's the case, we could see the bean carryout grow as well. We just don't know. I mean, but like I said, we're going to get government's first view, our first opinion of it here at the end of the week. And I think that has definitely traders saying, you know what, with the South Americans enjoying Carnival, the Chinese on their their New Year's holiday, I'm just going to sit with my hands in my pocket and wait and see what the government says, and then maybe trade off of that as we wrap up the month of February next week.
Do we wonder with those Outlook Forum numbers real quick that it could have a bigger impact in the market potentially with a lack of really other fresh news out there this weekend with China and South America on holiday? Do you think that these Outlook Forum numbers could yield a little more weight potentially this week, Jim?
It could, because the market is right now, the market is searching for some new data to trade. I mean, we're relatively starved with data. I mean, the one number that we all like, everyone, it's not just the ag market team, I think every trader out there is looking at that position by the funds. I'm sure you've talked about in the different shows you host. I mean, when you look at that corn and bean position combined, I think it's the second shortest we've ever been. The only time it was shorter, I think, was in 2019, roughly in the April-May timeframe. So the funds are carrying this historically short position. So, the real question is, are they going to keep piling into that, or are they going to say this trade is way oversold? There's way too many people in it. And I think a lot of people are looking for maybe something that maybe will ignite the reversal of those funds to at least get out a portion, if not a good chunk of that trade. And then, we'll see. Maybe, just maybe, if we're lucky, maybe we'll get some friendly response to the report. I mean, it could be a bearish report on Friday or a bearish number, and the market doesn't react bearishly. Maybe that's enough to get the funds to go, you know what? We've pushed it hard enough near term. We'll lighten up and we'll get that rally that so many producers out there are looking for to move grain.
We are having a conversation today on Market Talk with Jim McCormick from agmarket.net. Jim, I'd love your thoughts on this. Let's head down this rabbit hole real quick. Thinking about these markets, lower volume, lower volatility this week with everything going on. Obviously, these prices not what a lot of producers want to see, and we're still churning around, March contract lows in corn, for instance. Soybeans are 12 or below on the board. I mean, not the greatest prices considering where we were last year, but I know a lot of farmers, I've heard it's all over the board. Some folks sold a lot of grain. Some folks still have a lot of grain in the bin. So talk to me about risk management. I mean, is this a good week to try and go over your marketing plan when there's a lot of, lack of volatility in these markets right now, Jim? It may be a chance to, I use your term, you've mentioned this before, get some orders working, things like that this week?
Well, I think you got to take a serious approach right now. The market's very, very quiet right now. A lot of producers out there, Jesse, they're doing their taxes right now. They are meeting with bankers. They're meeting with their crop insurance, sellers right now. Mm-hmm. I'm going to put another thing on. I know there's a lot you guys are doing right now, but I'm going to say you need to sit down and look at your break evens. You need to look at your break evens of the crop you just produced compared to maybe the bushels you've got unsold. And then look at the 24, 25 crop coming in. And you've got to be serious and be honest with yourself right now. I mean, unfortunately, my viewpoint, Jesse, is we've just got too much grain at the moment. I do think the odds are high we will get a rally, but I think you got to be realistic of what's going on right there. I mean, there's a lot of clients we have that we talk to that have sold a lot of grain. And but on the other hand, unfortunately, there is a lot of producers out there who did not get the grain sold for various reasons. And they're struggling right now, and they've got to make a decision of their break-evens right now. Your costs are piling up. On-farm storage, people say, hey, there's not a cost. No, there's about 7-8 cents a month storage cost on interest on beans. It's around 3 cents a month on corn. If you've got it in commercial storage, those fees are really piling up right now. We're going to encourage you to try to mitigate some of that risk and maybe use an option type of situation. But, the reality is the boat has turned, in our opinion. We are no longer in a bull market. We are probably easily what I would argue is in a bear market, and rallies are going to be sold aggressively. If the funds get out of this corn position and, these shorters and all these, I do think we're going to rally, but it's probably, Jesse, not going to be as big a rally as we normally would anticipate, simply because of the wall of grain that's sitting above the market waiting for this rally to be sold. And it's going to be, so what I'm going to tell you, like you said, get those orders working, because if we do get the rally, unfortunately, the odds are it's probably going to happen quick and it's not going to last. And if you're not thinking about it, by the time you say, hey, should I make that decision? Should I pull that trigger at a certain price? That price may be gone before you can make the decision. So now's the time to think about what you want to achieve and then get the orders working via the options in the broker and the futures industry, straight out futures, or even the cash market.
And to your point on that, it could happen quickly. I mean, even sometimes, we think about this. I'm not awake at 1 a.m. when the overnight session's trading. Sometimes we hit some of those targets that we want in overnight trade. So I think it all comes back to, again, having that plan and having those orders working, locking in some floors, things like that. There's a lot of tools in the toolbox out there to use right now, Jim, and taking advantage of everything seems to be the most important right now.
You've got it. And I think you said the best part about it. You never know when it's going to do it. The market opens at 7 o'clock at night. A lot of people turn off their phones, 9, 10 o'clock at night. Europe opens in the middle of the night, you never know what the headline's going to be. We've seen the wheat market do some really weird moves on headlines out of Ukraine. And by the time you wake up, you're like, what the heck happened overnight? We're already 10 off the highs. Get the orders working right now, folks. That way you can take advantage of it. Because, like I said, I do believe the odds are high we will get a rally. But I also believe, unfortunately, if we're off to a really quick spring planning, I do not think the rally is going to last long, unfortunately.
Let's go over to livestock. You mentioned earlier some different dynamics over in the livestock trade. I know kind of choppy to start this week off in cattle and hogs, some tighter ranges here, but overall, it seems like the fundamentals, especially on the cattle side, remain pretty solid, remain pretty good. Jim, talk to me about this livestock trade and some of the things you're watching right now.
Right now, I think the fundamentals are very, very good right now. Overall, you got a very tight supply of cattle. We know that from all the cattle and feed reports and the inventory report. They're not going to expand anytime soon, I believe. The cattle are still recuperating from that brutal stretch of weather we had, so the supplies are tight. And the consumer demand, I think, overall has done a lot better than a lot of people would have thought. I know I was out over this weekend. I took my wife out for an early Valentine's Day dinner to a steakout up here outside of Chicago, and I'll tell you, I kind of snuck in there early because I wanted to go watch the Purdue IU basketball game, and we couldn't even get a seat. We had to sit at the bar. They literally were sold out. They said walking in at a little after 5, they said first available tables 8:30 at night. That shows you the demand is still very, very strong. So we got a strong consumer out there. Credit card debt is up there, but consumer wealth has increased more than their debt per se in percentages. So that's keeping the demand overall strong. I do think we could see a correction though. The stock market looks like it's ready for a correction. That may lend us down a little bit. If you're a producer out there, you might consider laying off some risk just because we saw what happened last time we were at these prices. It did go down. But overall, you want my opinion, Jesse? I got to be somewhat friendly to livestock going into spring. Tight supplies, strong demand. That usually is a pretty strong recipe for a bullish market.
Yeah, it is. I know export numbers too have been ticking up there on the beef and the pork side. And you think about just domestic demand and international demand, it feels like that's going to be very supportive here to both cattle and hogs here in the springtime as we move forward. So I would agree with you, Jim. It feels like there's a lot of factors that are good going for the protein sector right now.
You named it. Like I said, why are you buying the puts? Because it's insurance. But the overall trend's up. Hogs overall, they're chopping around. Their supply's tightening a little bit. I think overall they're going to be the follower to the cattle. But the cattle continue to grind higher. Hopefully that's a little bit supportive to the pork. I mean, right now, I keep telling people, I think your biggest problem with the pork industry right now is we got to figure out a way to get people to eat more pork. I mean, right now, obviously you go to any hamburger joint, you can get beef. You can go to any hamburger joint, you can get chicken. You can't get pork. I mean, I think that's my personal opinion. That's the pork industry's next goal is they got to try to find a way to get that pork out a little bit more easy to the public, plain and simple. I think that would do wonders for the pork industry as a whole.
I would agree with that. Good export numbers on the pork side for 2023, but always looking for that domestic demand too, Jim. I would agree with you on that. I mean, I like my bacon. I don't know about you, but wouldn't mind some bacon on that burger every now and then. That is for sure. That is for sure. Jim, let's wrap it up here today. Final thoughts from you. Great discussion as always. What do you want to reiterate to folks? What do you want to really drive home here today that folks need to think about right now in these markets?
Right now, I'm going to reiterate, Jesse. I know it's a very stressful time for the producers out there. We deal with a broad range of clients here at agmarket.net. I know it's a tough situation. The balance sheets are really, really tough, and in some cases, they are upside down. It is not a fun position to be in at this point in time, but knowledge is key. You need to talk to brokers. You need to talk to your banker and come up with a game plan. There is going to be opportunities to make money in this industry. There's going to be opportunities to mitigate risk. The key is to use the knowledge you can get a hold of from professionals out there and develop a game plan. The Ag Market team is here to help you. You can give us a call at 844-424-6758. Go to our website. We've got a great app that helps you market grain. But more importantly, like I said, sit down, like Jesse suggested, make a decision on what you do and get those orders working because it's hard to believe, but spring planting is going to come very, very fast.
That it will. Appreciate the time and the knowledge as always. Jim McCormick with agmarket.net. Thanks for joining us on Market Talk this week, Jim. Appreciate it, and we'll talk to you again real soon.
Thank you for having me.
All right, that's going to do it for Market Talk. Find us online at markettalkag.com. I'm Jesse Allen. Have a great afternoon.